What's up, everybody? Jaspreet Singh here, and it's no surprise that we're dealing with this massive inflation problem, which originally started from all the money printing that we did in 2020 and 2021 through the stimulus from the COVID pandemic. However, now things are getting a little bit more interesting because it is just starting to come out that apparently through all of the stimulus and money printing by the government, it also spurred a lot of fraud. In fact, some are saying that it is the biggest financial fraud in our entire history. Let me read you this title. This is from NBC News, and it's called, quote, "The biggest fraud in a generation, the looting of the COVID relief plan known as PPP." And there's multiple parts to this. Let me start by talking about PPP, because PPP was the program created by the government to help businesses survive through the pandemic. They created this system where essentially you could borrow money from the government for free, interest free. You never had to pay the money back. And then there was fraud through the unemployment system. And then there was some alternative other fraud. So I want to talk about these three things, how it became the biggest fraud, and then really the things that you need to be aware of with money and inflation right now, because the Federal Reserve Bank just had a meeting yesterday about inflation and interest rates. So there's some things that you want to be aware of. I'm going to go over all of that. But the one thing that I want to mention is I am in San Diego right now, and I want to give a quick shout out to Jose, because he said, just mention where I am recording these videos when I do them. So I'm in San Diego recording this video right off of my phone, because I want to talk about what happened yesterday. So starting with the PPP program, it was a very strange time where obviously the economy was shut down, businesses were shut down. And so the government created this program for businesses that essentially said that if you have a business, you have rent, you have employees, you can borrow money from the government to cover your expenses. And if you were borrowing, it was like $2 million or less, you don't have to really justify anything. You don't have to prove anything. You don't have to return the money back either. So you can borrow up to $2 million to cover your expenses. There was a limit depending on your income and how much revenue you've had and what your expenses are. But based off of that, you can borrow the money and you don't really have to prove anything if you're borrowing less than a couple $1 million. And it was pushed very heavily. Pretty much banks wanted you to take out a PPP loan because they would get a commission, the lending fee, if you got a PPP loan. And so everybody was pushing for it. Accountants were pushing for it because then they would get to do more paperwork for you and all of this and that. But what happened was a lot of people saw this, and this is what the article goes over, is that people who didn't have businesses, they would go to registries and see what businesses are out there, and they would then compile that data and then apply for a PPP loan, even though they don't own a business. And they would say, hey, I'm applying on behalf of this other business, and they would apply for this loan. And there was so little checks and balances of this. The money was just being sent out freely with little to no regulations at all. And so millions of dollars were sent out to these people who didn't even have businesses. And that money was spent on Lambos, Teslas, jewelry, a bunch of things that had nothing to do with really anything, because one, they didn't even have a business. And then second, you had the people who had a business who didn't need the money, who then just spent the money for themselves, where the owner enriched themselves, or the business person who took that money did something that did not benefit the business. And so it was just free money with zero interest that you didn't have to pay back, that you didn't have to justify, that people just essentially looted and robbed the government. And I can kind of briefly attest to the kind of craziness that was going on, because I did talk about this when it was happening, because I have a business, the Minority Mindset Companies. I have market briefs, and we have an office, we have employees, and so we qualified for the PPP loan. My rent is like $4,300 a month for our office, and everybody from my accountant to my banker kept saying, Jaspreet, you have to get this PPP loan. It's free money. Why wouldn't you get it? The government is giving you free money. And they were offering me, I forgot the exact amount now, but it was tens of thousands of dollars of free money. I would have not had to pay it back. There was no interest I had to pay. I didn't even have to justify it of how we use the money, because if you had less than $2 million, it was automatically forgiven. And I remember where I told everybody, no, I don't want the PPP loan, because I know where this money is coming from. I know the cost of this money. I don't need the money. And so I understood. I mean, we were talking about inflation in 2020 before anybody talked about the effects of inflation. But I was talking about how this money comes at the expense of somebody, because the government doesn't have the money to fund these PPP checks. And the Fed is printing this money out of thin air. And the most expensive kind of money is free money. So who's going to pay the price of this? Well, the average person. Regular American people. So I did not accept the free PPP money. I rejected that openly because I did not want to take that money. In my, I don't want to get too off topic here, but in my religion, there is a tenet called Kirat Karo. I'm a member of the Sikh religion, Sikh, and Kirat Karo means earn an honest living. And so for me, earning an honest living does not mean taking free money when I don't need it at the expense of other people. So that is why I didn't take the the loan. And it turns out that approximately 10%, this is what's reported, of the PPP money that was paid out, which is $80 billion. So 10% of 800 billion, $80 billion was what was completely frauded and stolen. $80 billion out of the PPP program was stolen and used for fraudulent purposes. And then you have the unemployment fraud, because apparently you had people who should not have been getting unemployment who were. People who should have been looking for a job who weren't. So you had some people who were sitting at home making more money from unemployment than they would their job, and so they weren't looking for a job, and they falsely put in that they were looking for a job. And that was the first side of the unemployment fraud. And the second side of the unemployment fraud was you had people who were kind of double dipping. Maybe they had a job, or maybe they were getting paid under the table, or they were doing something where they should not have qualified for the unemployment money, but they kept filing for it. And that fraud had accounted for, I'm just going to double check the numbers, it was $90 billion to $400 billion. They don't know how much money was actually frauded, but it was somewhere between $90 to $400 billion just on the unemployment side of the stimulus. So you had 80 billion supposedly frauded. It could have been more, but that's what they have reported for the PPP program. You have 90 billion to 400 billion that was frauded under the unemployment program. And then you have another $80 billion that was frauded through other welfare programs, other stimulus programs through the government, where people who should not have gotten the money got it. So what does all this mean? Well, the most expensive kind of money that there is free money. And the government is running a deficit, right? The government makes the money from taxes. And if you spend more money than you bring in, you have to make up for this from somewhere else. Either you can cut your expenses, which the government is not doing. You can raise your income, which means that the government would have to raise your taxes, or they would have to cut your services. They have to cut your social security checks, cut your welfare, which people don't want. Or they create this invisible tax, inflation. They print this money out of the thin air with the help of the Fed. And now who pays the price? The financially uneducated, the poor. You create a bigger wealth gap between the haves and the have-nots. The rich become richer because now your asset prices go up, while the poor, now your savings don't stretch as far. Your salary doesn't stretch as far. You create a bigger wealth gap, and now you tax the regular people through this hidden tax without any sort of legislation, right? I mean, if you wanted to raise taxes, you have to vote on it. But there was no vote on this. It was just free money that's printed, and people assume that, hey, I got some free money, everything is good, but there's a cost. Free money is the most expensive kind of free money. So now what I want to do, now that we understand that, we're fighting this inflation problem. Now we are dealing with the cost of this. We're dealing with the cost of all the stimulus. We're dealing with the cost of all the fraud that happened. And it has caused the inflation problem that we're facing right now. And just yesterday, the Fed put out a new statement. They put out their minutes talking about what they want to do. So before I go into that, I do want to mention one thing, that if you're looking for an easy way to stay up to date on what is happening with all of this, from inflation to the stock market, to the real estate market, to the global market, to the inflation, I don't know if I already said inflation. You can check out Market Briefs. It is a free financial newsletter that I created, where my team breaks down the top finance and business news into a fun, entertaining, witty email. I promise you are going to love reading it every single morning. It is free. Try it out. And if you don't love it, you can unsubscribe, but I promise you, you are going to love it. I get emails every day with people saying how much Market Briefs has helped them. So if you want to check it out, I'll put the link for you down in the description below. This is where we got to talk about what the Fed just said, because the Fed said yesterday that they will continue to fight inflation, because the Fed can either fight inflation or they can fight a slowing economy. The way you fight inflation is by pulling money out of the economy. You raise interest rates and you pull money out of the economy. When you raise interest rates, it makes it more expensive to do business. It makes it more expensive to go out and buy a home. It makes it more expensive to buy a car. It makes it more expensive for institutions and companies to borrow money. So as interest rates go up, the economy starts to slow down. And the reason why the Fed is raising interest rates is because that's how you fight inflation. You do the opposite of what caused inflation. Inflation was caused by printing a whole bunch of money and throwing it into the economy. Well, if you want to fight inflation, now you do the opposite. You don't print money, you take money out, you sell off some of the assets on the balance sheet, which is what the Fed says that they want to start doing in June, and then you raise interest rates to cool down the economy. But there is a cost of fighting inflation because then you have an economic slowdown. We're already seeing it happen. We saw after the first quarter, January, February, March, that our economy slowed down. And now we're hearing from companies like Target, Walmart, Amazon, that they cannot keep up with the higher costs that they are facing. Because on one end, consumers, regular people like you and me, we have to pay a higher price when we fill our gas. We have to pay a higher price when we get our groceries. We have to pay a higher price for rent and housing. But there's also the producer price, which is the prices that companies pay for their raw materials and their products. And what these companies, Target, Walmart, and Amazon, all said in the last few weeks is that their their producer costs have gone up even more than the consumer costs. So the cost that Walmart, Amazon, Target are paying is higher, and they can't push these prices down onto the consumers, and consumers are not able to buy as much stuff as they could before because more of people's money is being used to buy food, to buy gas, to buy your basic necessities. So these companies are saying that, hey, our profits are going to get hurt. We're not going to be able to make as much money because inflation is hurting us. So this is starting to slow down the economy. So typically when you see a slowdown in the economy, the Fed will cut interest rates. They will stimulate, meaning they create more inflation. They put more dollars into the economy to get the economy moving again. But this is why we're in a really weird situation because we're already facing really high inflation. And if the Fed now wants to fight a slowing economy, how are they going to do that when we already have super high inflation? Because if they do that, that's going to create even more inflation, and that would make the inflation problem worse. So this is something that you want to pay attention to. And what the Fed said yesterday is that they want to continue the inflation fight, at least for the near-term future. They said that they want to raise interest rates, the plan, which is interesting that they're saying that they want to do this in the future instead of just doing it now. But they say that the plan to fight this inflation is that in June and in July, they're going to raise interest rates again. They're going to raise it by 50 basis points, meaning 0.5% in June, and they're going to raise it by 0.5% in July. That means that you can expect, once they hike interest rates, mortgage rates will go up. You can expect interest rates to go up on credit card debt. You can expect borrowing costs to go up, which would hurt businesses. It would slow down the economy. But the reason why the Fed is willing to do that, again, they said it, is because we have a strong and robust economy. So the question is, how long or how strong really is our strong and robust economy? Because I think a lot of people are starting to feel the effects of a potentially slowing economy because it's more expensive to survive, it's more expensive to pay for your cost of living, and we're already seeing hiring freezes. Just look at the tech sector. We've been seeing layoffs through a lot of companies, and we have hiring freezes in pretty much the entire tech sector. Even the Fed came out. The Fed came out and said that they want a hiring freeze. They want to slow down wage growth as a way to fight inflation. So that's something that you really want to pay attention to, because now if the economy gets worse, you have to pay attention to what the Fed does, because that's going to influence all markets. It's going to influence the economy. And I mean, it's going to influence pretty much every aspect of the world, because now the global side of things is becoming much more real because the U.S. is involved in so many different parts of the world. It's not just the U.S. We send aid to different parts of the world. Sri Lanka recently declared default. The government declared default on their debt. You have about a dozen other countries that are close to potentially defaulting. And you have, I think it was like 70 countries, according to the World Bank, that are in the near term could potentially face a food shortage or potential famine. So, I mean, all these things have a cost, and if the US is going to get involved, there's more cost to all these things. So there's a lot of things you want to pay attention to. Obviously, market briefs will keep you up to date. I'll do whatever I can on my channel, but this is why you have to be financially educated and be aware of what's happening around you. If you enjoyed this video and you want to see how you can take advantage of this once-in-a-lifetime opportunity to build wealth, I made a video covering that, and you can watch it by clicking this button right over there. Thank you for watching, and as always, keep hustling. So regardless of whether or not we're going to see a recession in 2022 or 2023 or 2024, the reality is we have been kicking this inflation can down the road for a long time, and we've been really putting off a lot of issues